Hey, what's going on? My name is Dr. Boyce Watkins. Welcome to the Black Financial Channel. We're going to talk about the stock market and why the stock market has been bleeding badly. Today was another bad day for the market. A lot of your stocks probably dropped, and I'm going to explain why you lost money today and also give you some hope on the horizon. We're going to get started on the Black Financial Channel right now. Okay, maybe not. Hey, what's going on, guys? My name is Dr. Boyce Watkins. Welcome to the Black Financial Channel. That's theblackfinancialchannel.com. We're going to talk about the stock market and what's going on in the stock market and why the stock market is acting a little bit crazy this week. The stock market has pretty much been hit pretty hard, especially if you own tech stocks. Tech stocks and growth stocks were body slammed this week, mainly due to fear of this thing called inflation. Inflation is a very scary thing for investors and for markets. And basically, there is a sentiment right now that the Fed may not have control over inflation, that the Fed may actually allow inflation to get out of control, which could be very, very bad for investors of all backgrounds. And so effectively, what you saw this week was a correction that's been expected for a while. If you watch this platform, we've talked about the fact that a correction is coming. They always come. Now, how this correction is going to play out, nobody knows. Nobody knows if it's going to last a long time or a short period of time. But I do know that there were some stocks. I mean, there were some companies that got body slammed, like Workhorse, for example. Workhorse, that stock, which I actually like that stock. I made a lot of money from it, and I still have. I mean, even with the drop, I still made money. But I think that stock got sliced in half because Workhorse was supposed to get the USPS contract, and it didn't get that contract, which caused the price to drop. Now, we talked about that, though. Remember, there was always that warning of saying, hey, they might not get it. They might not get it. So Workhorse was actually a stock that I owned because I wanted to sell the options on the stock. I like to sell options to speculators. I don't really care much about buying options. I don't buy many options. I sell them. Your options did get crushed. Yeah, a lot of the options I sold are expiring worthless. And what happens is if you're on the sell side of options, you receive the premium no matter what. So I like to get my money no matter what. I like to have guaranteed money. But the benefit of buying the option is that if things go really well, you make a lot of money, you make a lot of fast money, and it feels really good. But if it doesn't go well, then you can kind of get your butt kicked a little bit. And so this was the week for the seller, right? It doesn't mean every week is going to be like that, but that's kind of what you saw. The stocks that got hit the hardest tended to be stocks that were in that growth category. By the way, there's some link to my options masterclass if you want to learn more about how I view options, how I teach options. Don't ask me about any particular stock because I can't really, there's thousands of stocks, so I can't tell you about every particular company. But what I'll say is in terms of options, in the stock market, things like that. Basically, that move in the yield on the 10-year treasury is what's really causing so much anxiety amongst investors right now. That's what was causing what they call taper tantrums, where the taper just kind of goes crazy and the stock market's going insane because stock market investors are seeing things happening in the bond market. Particularly in this case, they're seeing high expectations of economic growth. That's a good thing, right? They're seeing big money coming in, vaccines rolling out, economy's going to take off, pent up demand, money's going to be made. The downside, though, is that there has been an acceleration of spending that's expected. There's an acceleration of the inflation rate. Well, and what that does is that pushes up interest rates, which will kill your growth stocks, because your growth stocks are basically baby stocks that have a lot of potential. And the way stocks are valued is they use a model called the present value of an annuity model. And in this model, if the interest rate goes up due to something like inflation, then the price of the asset goes down. So this doesn't say that your companies are going to make less money. They're going to make the same money pretty much. What it's saying is that money in the future has less value because it's going to be inflated away, right? So what inflation does is it erodes the value of money that you're going to receive in the future. So they're basically saying that high inflation means, yeah, these companies are going to make big money in the future, but the future has less value than it did before because a dollar that I receive 5 years from now is going to be worth a lot less than a dollar that I receive today. I hope that makes sense. Inflation's always been around, but what they look at is not so much whether it's around or not. It's about calibrating and understanding the degree to which inflation stands relative to what it was before, right? So it's not so much about saying, oh my God, we have inflation for the first time ever. It's really saying it's higher than what we expected it to be. So it's about what it normally is, what you expect it to be, and then whether the realization exceeds the expectation. And right now you have inflationary problems because this $1.9 trillion stimulus is about to be pushed out. There's going to be a lot of spending that's going to happen after the economy reopens. And so that's all a good thing, but inflation is a very bad thing. And if they get the indication that the Fed can't control that, the Fed's job is to kind of manage that. And the Fed has pretty much said, nothing to see here, nothing to see here. There's no big deal. Well, if the Fed can't control that, then you're probably going to see more of a bloodbath in the stock market. More of your favorite tech stocks are going to get hit hard, especially your growth stocks. If you're buying companies like Tilray and there's some others I've mentioned, Virgin Galactic. If you own that, you probably lost some money. There are some of the meme stocks I think are okay. Jumia, we talked about Jumia a lot. Jumia was a high flyer. I think Jumia is trading in the 40s or the 50s. We started talking about Jumia back in the 20s, and it went up as high as the 60s, almost to the 70s. But Jumia, companies like that have a lot of future potential are going to get hit hard. Fisker, it's companies like that. So now Fisker actually did pretty well now, if I'm not mistaken. So long story short, it's going to be some rough rides. A lot of the trades that people are making now are toward what they call recovery stocks. These are stocks that are going to make money when the recovery happens. Your airlines, your casinos, your cruise ships, right? Royal Caribbean and Carnival, stuff like that. So that's pretty much where the market's kind of hit it right now. So what's going to happen next week? Nobody really knows. I just know that this week was a pretty tough week to be an investor. And if it's your first week investing, then that's good that you're actually coming in on a bad week, because now you're seeing what it feels like when it hurts. For a lot of you, this is your first bad week you've had since the start of the pandemic. So it's good that you're seeing this so that you know that this can happen too. So when you're buying options every week, never think that it's an ATM machine where you're automatically going to make money every week, because that's not how the market works. Okay, so that's it. That's my breakdown of the market today. I'm going to get out of here. I'm doing a special lecture tonight at the Black Business School, which actually, if you want to join us, you can go to economicsurvivalplan.com. I'm actually going to talk about the rules of economic self-defense, and also how you can form your own family bank and really pull together your family and your resources around you to build economic strength and security. And I'm going to tell you exactly what my family does and how we actually rose out of poverty. When I was born, my mother was 17 years old. She was a single mother. We lived in the projects. And since that time, we've been able to achieve some prosperity. And there's a formula to that. There's a method to that. Never let anybody think that it's about waiting for the government to do it. The government ain't going to do nothing for you. You got to do it for yourself. So if you'd like to join us, you can go to economicsurvivalplan.com. And if you're new to stocks, you want to learn more, feel free to do the free Black Stock Market Challenge. So the URL for that is the blackstockmarketchallenge.com. That's right there. So feel free to try that out. That's totally free. It's a free training on how to get started in stocks. So, all right, Antoine, he says, I'll see you tonight at 8. Yes, I will see you tonight, brother. So God bless you. I'm out of here. I got to go do some more work, but it was great talking to you, and I hope you guys have a great day. I'll see you soon. Bye-bye.